What's up, you guys? We've got an interesting stock for today's video that checks a lot of boxes, complete with a guru investor, SPAC IPO, a serious moat, high growth total addressable market, government and national security interests, and, of course, it's a renewable energy champion. Today, we're talking about MP Materials, a company that mines and processes rare earth elements, which are critical components of magnets used in electric vehicles, wind turbines, and a wide array of electronics, and much, much more. Make sure you stick around, because we'll touch on all of these topics, some potential risks, and then I'll give my opinion on the stock from a long-term investor's perspective. Hi, I'm Gio, and welcome to Renewable Energy Investments. This channel offers a high-level discussion of publicly traded renewable energy companies, because building an investment portfolio starts with building awareness. Okay, so you know that guru investor, Chamath Palihapitiya, the CEO of Social Capital? Well, he's been in the news again, and is the reason why MP Materials made it onto my radar. That's because he is an early investor in MP Materials, and is pretty excited by the opportunity, as you can tell by his recent tweets. We'll come back to Chamath's thesis a bit later in the video, but first, let's take a quick look at this company's business. MP Materials bought California's Mountain Pass mine from a bankruptcy asset sale in 2017 at a substantial discount to replacement costs. The previous owners of the mine, Moly Corp, went public a decade ago, then filed for bankruptcy in 2015. Moly Corp left behind a $1.7 billion state-of-the-art facility, and MP Materials was able to purchase this mine and some other Moly Corp assets at a substantial discount to replacement cost for just over $20 million. Aside from the great bargain, there is something quite special about this mine. As Jim Litinsky, MP Materials CEO, stated, "We have an over 8% concentration of rare earth elements in our ore, one of the highest in the world." But why does this matter? Well, rare earth is a bit of a misnomer. These elements are actually everywhere all over the world. However, you need a high concentration of them for it to make sense economically to mine and process them profitably. And MP Materials claims its California Mountain Pass mine is essentially the best ore body in the world. This is because the mine's ore body has a very high rare earth element concentration and low radioactivity. When compared to MP Materials mine's 8% concentration, other ore bodies in the US are less than 1% rare earth elements, which makes them not economical. If MP cannot be economic, it is unlikely that anyone in the US will be. Because of this, MP is currently the second largest producer in the world today, the largest outside of China. China currently dominates the rare earth element industry as their government made it a priority over a decade ago, and they have priced most of the competition out of the game. Aside from one processing facility in Malaysia, almost all of the world's rare earth element processing is currently performed in China. In fact, MP Materials currently has to ship all of its rare earth elements, more than 50,000 tons per year, to China, where they are processed, refined, and manufactured into critical high-tech products, such as magnets. These Chinese customers currently account for 100% of MP's $100 million in annual revenue. This brings us to MP's purpose for the IPO. MP will net about $489 million from the deal, and will use the funds to upgrade outdated Moly Corp era processing equipment in its California facility, so that it doesn't have to ship its ore to China for processing. The former Moly Corp assets they purchased at Mountain Pass include rare earth element separation equipment, which is used to divide the intermingled multiple elements into individual rare earth element components. Those systems, as originally designed by Moly Corp, didn't operate economically. But thanks to MP's partnership with Shenghe, a Chinese firm which owns almost 10% stake in MP, MP now has the know-how to revamp the systems and processes to make them perform competitively. The company's goal is to have that part of the operation up and running by the end of 2021, and eventually expand downstream all the way to magnet production. By producing its own high-strength rare earth magnets, MP will transform their business from the sale of mere commodities into a value-add producer of components vital to the electrification of society, and in doing so, anticipates commanding higher and higher margins along the way. Even though MP Materials has to pay the Chinese government an export tariff of 25% to ship their product across the globe and compete with China's domestic rare earths obtained using much cheaper labor costs and under less burdensome environmental laws, MP Materials still is slightly profitable today. This highlights just how valuable MP Materials ore is, and its potential going forward, once they expand downstream and control the entire rare earth magnet production chain. MP Materials' relationship with the US government. Recently, it has become very apparent that the US needs to become more resilient and less reliant on foreign powers when it comes to securing materials critical to national health and security interests. It just so happens that rare earth elements are required to manufacture many national security and defense systems products. MP Materials believes that it is uniquely positioned to solve the US government's rare earth element supply chain issues, and this belief appears to be mutual. For example, in April of 2020, the US Department of Defense awarded a Phase 1 funding contract to MP, specifically for this purpose. The contract serves as part of the Department of Defense's efforts to reduce US supply chain vulnerabilities by ultimately enabling commercial-scale production and operation of a US-based heavy rare earth separation facility. This just goes to show that the US government has a vested interest in MP's mining capabilities. Upon completion of Phase 1, the Department of Defense may award further contracts based on the Phase 1 results. Chamath's Bullish Thesis. Let's take a look at Chamath's Bullish Thesis, which is from his Twitter account. I'll just point out a few items I wanted to highlight, but the whole thing is worth a read. Lots of high margin opportunities to expand and become a full lifecycle player in climate change and electrification. Mining to manufacturing to recycling. Battery technologies are diverse. It's hard to pick a winner, and battery chemistries are changing rapidly. Electric motors are consistent and don't change much. Permanent magnets are the critical component of electric motors. Rare earths are needed to make these permanent magnets. Substitutability is low because of physical properties of rare earths. In this way, rare earth permanent magnets are similar to Intel during the PC boom in 1980s and 1990s. Lots of players in software, but Intel was the monopoly provider of the common input, their x86 chips. 80% of all permanent magnets come from China. Fortress Value Acquisition Corp creates a monopoly provider in the Western Hemisphere, about 20% of the world's supply. Current rare earth supply won't meet 50% of forecasted EV demand within 10 to 15 years, let alone other end markets. So market is supply constrained, which should mean prices of rare earths can go up. Increasing interest from the Department of Defense and USG as a critical input to US national security should create margin of safety and incentives for OEMs to diversify supply to include Fortress Value Acquisition Corp. Quick reminder to smash that thumbs up button. It helps this new channel out with the algorithms and makes all the research work that I put into these videos feel a lot more rewarding. Also, I invite you to subscribe to this channel to follow along with our discussion of wonderful renewable energy companies. Certain risks and question marks. The first red flag is the fact that the previous owner of the mine, Molycorp, went bankrupt as they were burdened with too much debt. And this struggle is common, as about 500 rare earth mining ventures failed around 2011 and 2012 alone. Not only is mining a capital-intensive business, given the cost of the mine itself and the mining and processing equipment, but new mines also can take decades to establish due to regulations, permitting, and build-out times. Accordingly, it's no surprise that so many of them go under. But there is reason to be optimistic for MP. First of all, they were able to purchase an already established mine at a substantial discount through the bankruptcy sale. Second, as Jim Litinsky, MP's CEO, said, Moly was simply a decade too early. There was a lot less demand since there were no electric vehicles on the road, and Moly could not compete with China. Third, Moly did not execute well, and there was much room for MP Materials to utilize superior mining and processing techniques. Finally, MP Materials is currently operating at a profit, albeit a small one. Another big risk is simply that MP has to compete with China in a commodities industry, and China could decide to price its rare earths aggressively to keep its monopoly market share. We all know most purchasers of commodities are simply looking for the cheapest price. and China has certain competitive advantages when it comes to keeping costs down, such as having less strict environmental regulations and access to cheaper labor. Being as MP is only slightly profitable currently, any dip in rare earth prices could spell trouble. But as stated earlier, MP's mine has some of, if not the best, ore on the entire planet, and the US government does not want to rely on China. Couple these two factors with increased demand due to electrification and social pressures on companies like Apple and Tesla to source materials from the US in a sustainable manner, and one can start to get comfortable with the China risk. Also, companies that are large consumers will want to shore up their supply chain of these rare earths, so vendor diversity away from China alone should supply stable demand going forward. A third risk is the potential emergence of more mines and thus increased competition. However, MP owns the mine with the highest concentration of rare earth elements in the world at 8%. Other ore bodies in the US are less than 1% rare earth elements, so any competitor mines would almost certainly be at a disadvantage due to the ore quality. Plus, it can take 10 to 15 years for a new mine to become operational, not to mention over $1.4 billion of capital is required, and there is also a high risk of bankruptcy for new mines. This makes it hard to envision too many new mines emerging, at least in the short term. A fourth risk is the potential emergence of new technologies, which could harm the business in any number of ways. For example, new technologies could potentially emerge for the production of synthetic alternatives to rare earth elements, widespread recycling that could reduce demand for new elements, superior mining or processing techniques rendering MP's current processes outdated and inefficient, end-use products built that require less magnets and/or rare earths. Although these are very real risks, the emergence of new technologies is pretty much a risk for any business, so I personally am not going to let this risk paralyze my decision making. However, this risk, like all the others, should be monitored on an ongoing basis. The financial projections. A quick look at the investor presentation deck shows what management thinks the company can do over the next 3 years. I would point out a few things. In 2019, the company had an 8% EBITDA margin. So this is a real company, not some vaporware. The company is a viable business, currently. The company expects revenue to grow at a compounded annual growth rate of 53.3% and EBITDA to grow at a compounded annual growth rate of 133.6% through 2023. The company expects to spend $35 million on capex in 2020 and $149 million in 2021 in connection with their Phase 2 expansion. As a result, they do not expect to generate free cash flows from operations until 2022. The next chart may be what really makes or breaks this investment. CRU, a leading firm on market analysis regarding mining and metals, projects NdPr prices to more than triple by 2025 due to strong demand and tight supply. MP Materials Management takes a more conservative estimate but still projects a substantial rise in price for the same reasons. If CRU or even management's projections are correct, MP Materials should be sitting pretty nice over the next 5 to 10 years. The IPO and Merger. MP Materials is set up to go public through a SPAC IPO. Sometime in Q4, Fortress Value Acquisition Corp will merge with MP Materials. Because Fortress is currently a public company, investors have the opportunity to indirectly invest in MP Materials prior to it going public by buying shares of Fortress. Per the SEC filings, investors have a few options, including purchasing common stock, warrants, or both. With all SPACs, there is a possibility that the deal falls through, and if that does happen, then investors in Fortress would be stuck with the shares in the shell company with no underlying business. However, if the merger does close, Fortress shareholders will own 23.4% of the post-transaction company. The combined company should have an estimated post-transaction equity value of approximately $1.5 billion and $500 million in net cash to fund its growth. My opinion. Overall, MP Materials seems very attractive. Being a leading producer of elements of which demand is projected to soar makes this one very interesting. Buying MP at these prices constitutes a discount to replacement costs. Factor in high barriers to enter the industry, the unsurpassed quality of the ore at the mine itself, and MP's plans to increase value by downstreaming processing and eventually manufacturing its own magnets, and the bull thesis for this stock becomes pretty clear. Anyone who listened to Tesla's Q2 2020 earnings call will be well aware that sourcing certain metals is a big deal for electrification. On the call, Musk harped on the fact that Tesla needs companies to enter the nickel mining business. Although nickel isn't a rare earth element, Musk's focus on obtaining raw material highlights the fact that our current mining operations are not producing anywhere near enough materials needed for the impending electric revolution. It may simply be a matter of time until demand for these rare earth elements outpaces supply, causing prices to shoot up. The bull thesis sounds great, and I could see there being a ton of demand. But with all that said, I still can't see myself going too heavy in this stock, although I do have to admit I do want to scoop up a few shares. I simply do not have enough expertise in rare earths or the mining industry to be able to fundamentally understand the business at a high enough level. This one is simply outside my circle of competence, which makes me a lot less confident in my ability to predict where this one is going over the long term. The business is currently only slightly profitable, so any hiccups could mean it becomes unprofitable. This would be especially concerning given the mine's previous owner went bankrupt. My lack of expertise also makes it hard for me to get comfortable with the supply side of the equation. If supply rises with or faster than demand, then prices may stay flat or decline. I would need to be confident in my ability to understand and predict a few things, such as how many other mines will open over the next 5 to 10 years. Will the cost for MP to extract rare earth elements be in line with, above, or below its competitors' costs? What will it cost MP Materials to comply with the environmental regulations involved with extracting and restoring the mine? And how will these compliance costs compare with that of other mines in other countries over the next few decades? Because of all these reasons and my lack of expertise in the field, this one goes in the too hard for me to fully understand box, and thus I have to limit the amount of capital that I put into this one. I'd love to hear your opinion on investing in the rare earth mining industry. Let me know in the comments below. Do you agree with Chamath's bull thesis? Do you think the price of rare earth elements will rise dramatically in the years ahead? Or would you rather sit on the sidelines when it comes to investing in rare earth mining? Thanks for making it to the end of the video. Have a wonderful day, and I'll see you on the next one. Smash that thumbs up button and don't forget to subscribe.